How to get a mortgage without providing tax returns, coming up. Hey guys, I'm Adam Lesner, and my oxygen is getting borrowers approved when other lenders say that it's just not possible. Today I'm covering how to get a mortgage without providing tax returns, whether you're a business owner, a wage earner, W-2 employee, or a real estate investor. We're gonna go into exactly how to get approved without providing your tax returns and closing successfully. Let's take a look. So the first one, looking at a bank statement mortgage. If you are a business owner and you've been in business for at least 2 years, a lot of times you're gonna have some write-offs that you're gonna take advantage of, and you might have a CPA that helps you take advantage of the write-offs that are available for you. That's great. The only time it bites you in the butt is when it's time to get a mortgage. So what you want to look at is getting a bank statement mortgage, a bank statement loan, and I'll include a link to everything that I'm going over in the show notes and below. So a bank statement mortgage is where you provide 12 months bank statements. You can provide personal bank statements or business bank statements, depending on how you pay yourself. Some business owners pay themselves out of their business account into their personal account every 2 weeks, or whatever the case. They pay themselves a salary. That's fine. But if you are getting approved with a business account, or you use your personal account as a business account, you don't actually have a business account, what the lender is going to do is they're going to look at 12 months bank statements, calculate your deposits, and give you a 50% haircut, because they have to account for expenses. Now, if you qualify with the 50% haircut, then you're good. If you don't, then we need to get a P&L from a CPA or a letter that states what your expense factor is. So minimum being 35%. So if you have a 35% expense factor that's applied to your total income on your deposits and your debt to income ratio works, then you're good to go. So a few things to keep in mind with the bank statement loan. If there are some unusual deposits and there's a lack of consistency, it could be an issue. But a lot of times, as long as you can connect the dots and show that it was related to business activity, then you should be good to go and you're in good shape. What I will tell you is a bank statement loan is a great solution for business owners who are told that they can't qualify for a mortgage because of the way that they show their income on their tax returns. They may actually have really good income, and it's just a matter of a technicality on some write-offs that you took advantage of. So I highly recommend you look at a bank statement mortgage. Number two, for very well qualified borrowers, there is a profit and loss only mortgage. So you can get approved based off of a CPA prepared profit and loss statement over a 12-month period, okay? Now, I say very well qualified, meaning you need to have really strong credit. You need to have a very substantial down payment. So this isn't your regular situation. This isn't your typical scenario with purchasing or refinancing a home. It's a very, very well qualified situation. Number three, if you're a wage earner, if you work for a company and you are a W-2 employee, you may be able to get approved with just providing your W-2s and your pay stubs. If your lender is telling you that you have to provide your tax returns, I'm telling you right now, it's because it's an overlay. You don't have to provide tax returns if you're a W-2 wage earner on a mortgage. That may not be the case if you are commissioned. If you're a commissioned employee, you're going to need to provide your tax returns. So that doesn't apply for this scenario. But if you're a W-2, you're a salary or an hourly situation, tax returns, no need, you should be fine. Number four, last one. If you're a real estate investor and same thing as a business owner, you have a lot of write-offs that you're taking advantage of. Or maybe you have so many properties, and in the way that you show your income on your tax returns, it's just the bottom line, it's just not there. For real estate investors, if you're looking to purchase or refinance a home, the approval can be done based on cash flow of the property, not personal income. This is huge because this simplifies the entire process and really just frees you up to be able to do what you need to do in terms of how you file your taxes and still being able to invest in that next property or refinance the properties that you currently own. So the way it works is the lender is going to order a 1007 rent schedule. This is a form that shows the lender what the fair market rent is. It's included in the appraisal. But as long as the property pays for itself As long as you're breaking even, including principal, interest, taxes, and insurance, and HOA dues if you have HOA dues, as long as you're breaking even, you're good to go. There's no more income verification. You don't provide pay stubs. You don't provide tax returns. You don't provide anything other than proof that the property breaks even. If you already own the property and this isn't a purchase, you're going to need to provide a lease agreement. If this is a refinance, just provide the lease agreement that you currently have. So 4 ways to get approved without providing tax returns: bank statement mortgage for self-employed borrowers, a profit and loss only mortgage for well-qualified business owners, wage earners that earn a W-2 and aren't commission. You don't need tax returns. And lastly, real estate investors getting approved based on cash flow. So I hope that was helpful. Again, I'm going to include a link in everything that I just went over below, so take a look below in the description. Hey guys, thanks for stopping by and watching the video. I invite you to subscribe if you haven't already. My job is to dissect some of the most interesting mortgage challenges and give you the tools and solutions you need to accomplish your homeownership goals. I look forward to seeing you next time.